So this is how I lost just over $500 today trading the Nasdaq. So firstly, my bias for the day was bullish because we swept those 4-hour lows. We swept those 4-hour lows right here on pre-market, and after we swept those 4-hour lows, we invalidated this fair value gap right here. We invalidated this fair value gap. After we invalidated the fair value gap, we broke structure to the upside. So to me, that's confirmation showing that we turned bullish. Then waiting for market open. Market opens 9:30. I marked out this hourly high and this hourly high over here. Market opens 9:30. We wick up into this high. We don't make any reaction. We don't reject. We don't reverse. Nothing. Then we continue up to this hourly high over here. After we sweep this hourly high, we get a 5-minute break of structure to the downside right here. After we get that 5-minute break of structure to the downside, for me that's confirmation that we switched order flow and we're now bearish. Um, After that happened, I went down to the 1 minute and I'm looking for further confluences, fair value gap, equilibrium, whatever. And I had marked out this 5-minute fair value gap right here, and I also marked out 15-minute equilibrium right here. I marked out 15-minute equilibrium, and on the 1 minute right here, we come up here, we tap into the 5-minute fair value gap and into equilibrium. So both of my 1-minute confluences, so I got further confirmation, they both got hit, which was the equilibrium and the 5-minute fair value gap. After that, I was looking for one more confirmation that we're going to continue going bearish, and it was this 1-minute break of structure right here to the downside, and the inversion. So not only did we break structure to the downside, but we also invalidated this fair value gap. After we invalidated this fair value gap, I entered on the next candle with my stops right above this the most recent high, and I had my take profit at hourly lows right here. I was aiming for a 1 to 4, and clearly, as you can see, we did not. I got stopped out 3-4 minutes after that, and I lost $500, or just a bit more than $500. And yeah, the key mistakes, the reasons I think I lost this trade were two reasons actually. I took the trade too late. I took it at 10:37. Market volatility and volume starts to die down a bit after macro, and clearly I took the trade too late. It was too late to take a trade, and I went against my bias. I went against my trading rules. I was bullish for the day, and we showed more. Everything was showing bullish. Sweep of we had sweep of those hourly lows right here and sweep of those 4 hourly lows right here. And after that, we inverse this fair value gap and we break structure to the upside. So all of the confluences were showing, although like confluences were showing that order flow was bullish. And I went against my trading plan because I was eager to take a trade. And yeah, I took a losing trade, took it too late as well. So basically, I went against my trading plan. I went against my trading plan by going against my bias, going against the trend, which was bullish, and um, trading too late, taking a trade at 10:37. Those are my main two mistakes. Even though all the confluences were showing that okay, you can take a short position. We had a sweep of liquidity. We had a 5 minute confirmation to the downside, 5 minute break of structure. Equilibrium getting hit, equilibrium getting hit right here, and then 1 minute confirmation, which was a break of structure to the downside and the inverse fair value gap, and the fair value gap getting inverse. Even though we had all these confluences that showed that we should take the trade, it still went against the most important rule, which is like your bias. The trend is your friend. Always trade within the trend, and it's gonna be a better setup, a higher probability trade to take. So this was a lower probability trade to take. And also another mistake was my stop loss. I was aiming for a high risk to reward. So if I had my stop loss, for example, above, I would have obviously still gotten stopped out, but that would have been the right thing to do. Have your stop loss on the on the 5 minute fair value gap right here. Have your stop loss where the fair value gap's wick is, or have it at the highest. But then that would like obviously mess with your risk to reward too much. Like there'd be no point to take the trade. So overall, the things to take away from this is don't go against your trading plan, don't go against your bias, don't trade too late, and place your stop loss correctly. And yeah, that's pretty much how I lost just over $500 today.